Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Jim Carney. He's the founder and CEO of Parplus Partners. We're going to take a look at more volatility, chop ahead, perhaps Super Tuesday is the next catalyst. Jim, it's great to have you with me, and I'm actually excited to have someone on there where we can talk about volatility because there really hasn't been much over the last year and a half for the most part. What type of fund is Parplus Partners?
We primarily trade volatility products. That's how we generate all of our alpha. We try and outperform the S&P 500.
Is that the name of the company, Parplus? You always want to do better than Par?
I think funds should try and have a hurdle rate to try and beat, and I think that the S&P is the main benchmark, so you want to define that you're better than something.
Yeah, and you have a really novel approach to that. Even traditional asset managers are always considering new models. Your approach is very different.
It is, we take 100% long equity exposure all the time, and then we trade alpha trading around that, and hopefully it ends up being a reasonable combination.
Yeah, but even with your fee structure, you were a prop trader, so you eat what you kill.
Absolutely.
Tell us more about that.
Yeah, the Chicago style trading is definitely, if you don't make money, you don't get paid.
Right.
And we feel that that's the way it should be in the hedge fund world as well.
All right, so it's been challenging in the market where volatility has been relatively depressed. We've seen some small pockets here or there, over the course of the past 18 months, mostly on the overnight, sometimes intraday. What's it like managing this environment?
There has to be some sort of pressure to make a lot of money in volatility. There are opportunities, but there's no huge opportunity right now. There's almost no pressure in the marketplace. Events, such a little blip, and then it's back. Like last night, people thought something might happen with the coronavirus, with the new using CT scans and other methods to figure out how many people have it. But nothing. The market's straight back and all the way up, and that's continually happening. If I had to guess, we're going to have more things like Tesla, where we're going to have a blow-off top.
I was just going to say that. They did a $2 billion offering last night. It was down 6% to only be up 6%.
They should have taken in $5 billion at these levels, because
why
not build a balance sheet
right?
at this point? So it's
yeah. And you would think, okay, coronavirus, that's clearly something we should be worried about. You're in the middle of the election cycle and campaigning. You have, Bernie Sanders perhaps as a front runner on the Democratic side, which you would think in theory would not spell well for stocks.
Is he the front runner? He got less than half the votes that he got in New Hampshire last time.
Okay, so almost regardless of who the front runner is,
Well, I think what was clear after New Hampshire is no one cares for any of those candidates.
Right.
None of them has any momentum. If you have a base on the Republican side where it's winner take all, you could get through like Trump did with a very small portion of the vote.
Right.
But it's not winner take all on the Democrat side. It's that way on the Republican side. So I don't see any of these candidates getting a mandate behind them. The most likely thing is that Bloomberg gains momentum as he is now and starts to rise as things go.
So, okay, outside of coronavirus, outside of what's happening, on the broader level with the election, Super Tuesday, do you think that could be the next catalyst? Why is that?
I think it'll be a pretty positive catalyst, but I think we'll kind of know almost before then. If Bloomberg rises, I think that Bloomberg will be better than any of the other Democratic candidates for president. So. My guess is that, if I had to bet, and it's a long shot, but my guess is that it's a brokered convention and he gets the nomination.
Yeah, do you think we could see some volatility chop around that?
Absolutely. Volatility's not very high right now, and there's a lot of things going on. I'm not saying be long volatility, but I certainly wouldn't be short.
Yeah, well, it's impossible to be short anything in this market. I guess the positive take on that, it's cheap to buy vol at this point.
It is. It's not very expensive, all things considered, of all the possible outcomes of what could happen. Right. Bernie Sanders could get the nomination. You never know, but it's not likely, but that would cause the market to move.
All right. We have to catch up after Super Tuesday. Thanks so much for joining us, Jim.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.